All right, good afternoon, Checkmate crew. Today is Thursday, August 25th. It is just afternoon here in New York. It's good to see everybody again. All right, well, let's get down to it. As we always do, there's no time to waste. Today, in early trade, I guess it would be overnight for a lot of you who are based in the U.S. China made an announcement for additional stimulus for the economy. As you may or may not be aware, with all the COVID lockdowns and all their growth headwinds from from all the debt in their property markets, they're trying to support the economy somehow, and they earmarked about 1 trillion yuan for infrastructure projects, which is very interesting. That's the story. Okay, now that is the story. Let's look at realities here. The Australian dollar, it seems to be reacting to that. We saw a little bit of a boost today. Remember, guys, from Discord, I told you guys about the 18-day moving average about a month ago. I reposted it last night on the Forex channel, but it seems to be that the 18-day moving average. All right, actually, there's so many lines on this chart. Let me go to Trading View, where it's a little bit where I have a cleaner setup here. It seems to be that the 18-day moving average is acting as a pivot for a lot of currencies, okay? And Australian dollars is one of them. As we can see here, the 2 standard deviation Bollinger Band that I set around the 18-day moving average, as you can see, it seems to be a good pivot. This is something that I've noticed, since June and July, but it went over the 18-day moving average, and now it's actually settling below. Okay, I think if the Australian dollar keeps going down, and right now the 18-day moving average is sloping down, I think if it keeps going down again, I think then that pretty much that stimulus, the market is saying that stimulus is not enough. Okay, it's not enough. And that is what I suspect. China right now, one of the things that's not being talked about in the media right now is they have a water crisis. Okay, I don't know why they're not covering that. They're covering all this COVID and the property debt thing. I think their property debt problem is actually not that big of an issue. The biggest issue that they have, in my opinion, is water. Why? Because there's a whole industrial area in China that gets their power from hydroelectric means. So right now in their reservoirs and their rivers, they have much lower levels, and now they're having power issues. So they already had power issues before because of natural gas prices and fossil fuels being up. Coal also right now it's way up than where it was about a year or two ago. And not only that, now their hydroelectric power is getting hit. So what are they going to do? Are they going to cut back on water usage as well? I think that could send things over the edge. I think that's the risk that nobody's talking about in China is the water crisis there. Not many people are covering that. I know there are a few institutions. I have some friends still in those big institutional banks, and right now only very few of them are talking about the water crisis. But the general public doesn't know about it yet, or the media is not covering it yet. I think again, the Australian dollar, it tends to be a very good indicator of what is going on in China. Okay, let me just put the China ETF on there. And if you actually take a look here, as you can see, wherever the Australian dollar goes, China usually follows. Okay, and I think if the Australian dollar keeps making lows and it cannot get over that 18-day moving average, I suspect it will go down, and that is probably an indication that stimulus and all that quote unquote good news from the media, it's all BS. Then it has to, that usually this is a lie detector for China. Another thing that Australian dollar is a lie detector for is metal markets. Okay, right now with metals, with Australian dollar doing so well today, we're seeing gold doing very well. Gold, it was actually doing better today, but now it looks like it's losing a lot of its gains. Gold, I still am going to go long at 1680 or so. It's just a temporary pop that I'm playing. I'm not like some gold bug or anything. Somebody called me a gold bug on Discord today. Somebody who I feel is very, very smart themselves, very reasonable, called me a gold bug. So I don't know what to make of that, but I'm not a gold bug. I just think that it's just very, we've been talking about this level for a while now, since June. This is just a level where we've seen a lot of institutional demand for gold, okay, at 1680. We saw it 1, 2, 3, 4 times in the last year. I'm saying, well, I think it may be a 5th time, especially if the dollar spikes, okay? So Australian dollar generally is usually is a good sign for the metals as well. If the Australian dollar goes down, though, that might be something going on in China. China is also one of the largest consumers of metals as well. So again, if something bad is going on in China, I can definitely see a lot of the industrial metals coming down. But if you're going to play one metal in the next 5 years, again, I keep saying this. I've been saying this since June. It's uranium. I feel so bad on missing out on this. We were so greedy. We were trying to wait for another undercut in the market to buy. We should have just bought when we talked about it in June. I should have just went for it and just held my nose and buy. But I didn't. And that's life. And after yesterday's news, it popped up like this. So if you're going to play one metal, it's going to be uranium. But if the Australian dollar pulls back, maybe if we're lucky enough, we see a pullback in some of these uranium names. Again, from the plan, I always put the plan in the end. Also, so I'll go over it one more time at the very end. But I plan on buying four U's when we get to this level, hopefully around the 6s or high 5s. All right. So that's what I see as far as the news from China. Tomorrow we have the Powell speaks tomorrow. It is the Jackson Hole Summit for the heads of central banks. They all meet in Jackson Hole, Wyoming at a retreat, and they talk about policies going forward for the next 12 months. The big thing that comes out of Jackson Hole is the Fed chairman speaking. Usually he or she will speak Friday in the morning. So we'll see what happens tomorrow with that speech. There's a lot of expectation that Powell will be hawkish on that announcement. Actually, lots of retail and hedge funds are positioned increasingly short. A lot of puts. They bought a lot of puts and they shorted a lot of futures. Okay. And today, as promised from yesterday, I'm going to go over options positioning in the market for September options expiration. I think there's a lot of clues as to what may happen in the next couple of weeks based on options positioning. All right. So here it is. Right now, there are lots of calls and puts that were bought, both sides, okay? More so on the put side, hedge funds are very, very heavily in puts, and so is retail. We saw some institutional accumulation in calls. We also saw some retail call chasing as well. So there's a lot of calls on, or a lot of long gamma. Basically, they bought calls and bought puts, all right? So usually when there are lots of open interest on both the long call and the long put side, you see big moves happening about a week or two before options expiration, and that big move gets faded, okay? So this is what I think might happen, okay? There's a lot of put buying happening for tomorrow. So what if everything comes out as expected? What if the Fed chairman, he's just enough hawkish as what everybody expected, or less hawkish than what the market expected. Okay, I can see those puts getting sold. Okay, I can see those puts getting sold. VIX dropping a little bit, and we possibly go toward 4,200, mid 4,200s or so. Okay, actually, let's if you actually look at the options chain, let's actually look at it together. All right, for September, this is a monster options expiration, guys. By the way, this is the biggest options expiration in stock market history that's about to come up right here on the SPX. Okay, this is going to be a historic options expiration. Let me tell you why. All right, so look at this already at 4,000. That's the big OI strike right here. 40,000. Look at that. What is the? It's already at 120,000. Okay, 120,000 options OI for 4,000 in the put side. Let me remind you guys, okay, the nominal value of one SPX contract is the same as 10 in SPY. So it's like as if there's 1.2 million puts at the 400 strike SPY in the SPY ETF, SPY ETF. Okay, this is a huge astronomical open interest right here, 120,000 contracts on the put side. On the call side, we also have about 100,000. So again, if we were to use the nomination of SPY ETF, that would be about a million contracts that are currently in the money in calls right now. Okay, huge. All right, now if there's also, if you look at this, there's also lots of in the money puts as well, 36, 47, 25,000, all across, all the way up, that are out out the money on the call side, in the money on the put side. Okay, so lots of in the money puts as well too. I can definitely see tomorrow, after the announcement, maybe the market was over hedged for tomorrow. We see the VIX come down, forcing all these deltas to diminish. If the market goes up, all the deltas on these in the money puts are going to go down. So what does that mean? That means the market maker will have to buy some of that underlying to even out their deltas, okay, to delta hedge pretty much. So they're going to be buying to delta hedge. We could see a pop, okay? We could see a pop. Maybe we could see a pop all the way to like a call wall around 4,250 or so. I think that's reasonable. Maybe even all the way up to 4,300. It is possible. Okay, we have to keep that as a possibility. I have put spreads on most of the indices, so this is not what I want to see, but it is what it is. I'm just reporting to you guys what I see. All right, so that's definitely a possibility. If we look at our moving average theory as well and apply some of our macro data and some of our options data, let's actually see if any one of these moving averages work. Remember from yesterday, we said moving averages work better on the daily time frame for S&P 500. We were talking about the 200, the simple moving average, 40-day EMA, and the 9-day EMA as well. So if we see a pop, we see right here, we've got one EMA at around 4180, so around that 4180, 4200 zone. Maybe if we see we can see that overshoot. We've seen it overshoot this line before and they come back down within a week. So maybe it goes after that 200-day moving average again. Okay, I can see that go after the 200-day moving average and then dump again. So generally, again, when we see lots of in-the-money calls and lots of in-the-money puts, both at very high open interest, we generally see a big move happening about a week or two before options expiration, and that big move gets faded, okay? So I do think that it's going to pop up first and then get faded. That is probably the trajectory that we're looking at. That's just a guess. It could be the other way around. Maybe it drops first, and then that first initial drop gets faded, and then it goes back up. Okay, that could be the possibility, but just from the weakening liquidity data that we're seeing from our junk bonds AUD line as well as the high-low line, I don't think that's the case. I think the bigger second move is going to be the down move. Okay, so that's just from looking at the liquidity data and the macro data that we look at on a daily basis. So that is S&P 500 right now. Huge record OI around the 4,000 strike. I think if we just shoot straight down into 4,000, I think there's going to be a panic. If we shoot straight down tomorrow into the 4,000s and we break that zone, that 4,000 zone, I'm pretty sure all those people that are short those puts, those commercial dealers that are short those puts, they're going to cover. They're going to cover because they have to, they to manage risk. So when they cover those short puts, what does that mean? That means those commercial hedgers are going to buy puts. Other market makers are going to have to sell them those puts. So then they're going to have to short the underlying in order to even out their books. That's why I kept saying last week, weakness can beget more weakness in this market based on options positioning. Okay, if we break down that 4,000, we're going straight down. Okay, there's going to be, I think, a little bit of a panic. People, the dealers that are short puts, they're going to have to buy puts at whatever price possible. And I think that's going to beget more selling in the market. The VIX will spike, and we'll probably see an outsized spike in the VIX as well. Okay, there's a lot of actually VIX shorts at VIX 30 as well. For the September expiration. Actually, September expiration is a huge expiration, not only for S&P 500 but also for the VIX. If you look at the VIX calls right now, one of the biggest short positions right now is the VIX 30 strike calls for September expiration, the monthly expiration. There's 155,000 calls in open interest right now. Okay, what if we pass 30? What if we get closer to 30 and those dealers that are short these calls, what if they have to cover? If they cover, they're going to hedge. Usually those that are short the VIX calls, when they manage risk, they usually buy SPX puts. Okay, so when the dealers, when they have to hedge on these short calls because they need to cover, they're probably going to buy some SPX puts. Maybe there could be some short covering here, but it's a well-known fact that VIX, whenever there's a panic, spreads widen because there's only one exchange that trades the VIX options contract. So whenever there's a panic in the market, there's less competition for this market. So you see spreads really widen. So it becomes really expensive to close and hedge using VIX options. That's why usually the dealers that are involved in VIX options chain, they'll usually hedge using the SPX option chain, the S&P 500 options chain. So again, those that are short the 30 calls in the VIX, they might have to run toward and buy SPX puts at whatever price. Again, weakness begets more weakness, okay, if that happens. So if we see it pass down below 4,000, I think that's a big possibility. If we see VIX challenging that 30, I think that's also a possibility as well too, okay? So keep that in mind. But generally, again, if just from my studies, whenever we have lots of in-the-money calls on the S&P 500 chain, on the call side and on the put side open interest, generally what we see is a big move a week or two before, and then that move gets faded. I think it's going to be up first and then down tomorrow, okay? I could be wrong. We'll see. We'll see what happens, okay? So that's just what I'm seeing from the options chain on that, all right? Another options chain I want to be looking at is also QQQ. QQQ also has a pretty decent-sized position. Lots of QQQ stocks like Costco, Amazon, Microsoft, they all have big options expirations coming up. So that's kind of interesting that all of them are it's all around September, with crypto market too around September. So definitely a lot of institutions are hedging for something that's going to happen in September. We got the big Fed meeting coming up. We also have this, Jackson Hole Summit. So I'm sure, there is a lot of short-term fear and some short-term demand for hedging. So as you can see here too, we got a huge OI and the 300s for the options expiration for September. So 300, there's a lot of open interest on the put side. Decent amount on the call side. Usually a lot of the QQQ options market is driven more so from retail than institutions, more so than SPY. So usually we're going to see the large OIs out the money on calls. Okay, so if SPY drops, if SPY and SPX drop, we could definitely see dealers on also the triple Q, and a lot of the triple Q stocks also have to run for cover. Okay, so we're seeing kind of a similar thing already too. If you notice on QQQ, another reason why I think it's going to go up first, after, especially if tomorrow's Powell speech is less than overly hawkish. I think it's because we also have all this in the money puts right here. Look at that, 325 puts, 125, 330 puts, 100,000. There's a lot of in the money puts on QQQ. A lot of put chasing happened at around the bottoms. A lot of hedge funds chased all these calls, and so they chased all these puts. They chased all these puts down in anticipation of FOMC. So some of them are in the money right now. We haven't seen them sell these yet. So if they sell these because it's less than hawkish, we could definitely see QQQ pop. Okay. So again, I'm anticipating what could be. I'm not trying to predict the future. I'm just telling you guys what I see based on the options market. All right. Another options market that I want to look at today is crude oil. Okay, remember our crude play. We have our plan for crude. Actually, one of the things I want to talk about briefly is the futures market. So you know that every month there is a different contract for oil. Okay, it's almost like each contract is its own little market. Okay, now specifically what I want to look at is the December oil contract. And why is that? There's a lot of money in it. Look at this. Look at the put and call open interest. Those white boxes, that's all December. It says November, but it's because in the futures world, the name, so if it's a December contract, it expires in November for December delivery. So, you know, the month that they're talking about is the delivery month, but it really expires like a couple of weeks beforehand. So it really is the November expiration, okay? But it's the December contract. If you look at the December contract right now, huge open interest at certain strikes. Guess what strikes are at guess what strikes have the big OI right now? Guess. Right at our levels of our plan for oil. Remember, guys, how I said that for the plan for oil was to look for that higher low, all right, around the 18-day moving average, all right, and then sell at the highs that were made earlier in the year. And if you look at the November contract, okay, so every contract is going to look a little bit different, all right? So let's actually look at the first contract first. So the closest expiration contract right now is the October contract. So this is it, okay? This is what it looks like. We don't need the moving averages. Don't need the moving averages. Actually, let's do it on this chart right here. This one, I need the Bollinger Band. I want to show you something on the Bollinger Band. So this one is the front month crude oil, okay? This is CLZ 2022. This is the December contract, okay? So it looks a little bit different, okay? It looks a little bit different. But guess what? Remember that plan that we had? I mean, that lower high gets right at 90. Right at 90. I mean, if it takes a few days to fall, the 18-day moving average for the crude oil December contract is going to go to 90. That's exactly where we see our first put wall and the December contract right here, 10,000, and that's a pretty big OI. That's a pretty decent sized OI right here. Okay, so that is where I'm gonna buy. I think a lot of these are lots of puts that were bought. All right, and I think a lot of the people that bought these puts, they're going to cash in their puts once it gets to 90. That 90 happens to coincide to our buy level of the 18-day moving average that we talked about yesterday and the day before. So it all lines up. The moving averages are lining up with the options data as well. So that's for the December contract. If you actually look at some of the other contracts, they don't have the OI. Most of the OI and a lot of the activity right now is in the December contract. Something is going on for December, okay? Something is going on for December. Also, too, our take profit level, we were talking about, previously when we were looking at the front month contract, all right, at the front month contract, we were talking about, on the front month contract, we were talking about 120 or so as the short. Well, the thing is, the December contract never got to that high. It never went that high. There was huge backwardation where the front months made bigger outsized moves and made higher highs than what the back months, the further dated months did, okay? And that caused a huge backwardation back early in the year, if you remember, all right? The December contract never went that high. So if we're going to go long on that 90 on oil, I think a good take profit would be around 99 or 100 on the December contract. Okay, 99 or 100 on the December contract. So from 90 to 99 and 100, and then I'm going to scale into puts on the December contract at around 105 to 107 zone. The 105, 107 zone. Okay? So it's still the similar plan, but I'm not going to base it off of the front month contract anymore. I'm going to base it off of the December contract. There's now enough money where I think it makes more sense to just look at the December contract. I'm not even going to look at the front month contract anymore. I'm looking at December because that's where the money is. As my old mentor said, go where the money is. You follow the money, okay? And so we're definitely going to follow the money. The money is in the December contract. That's where all the open interest is. And right now it's matching up exactly with our original plan, transposing those levels to the December contract. That exact plan that we had for the front month contract, if we transpose that into the December contract, it works perfectly. It works perfectly. The options expiration, everything, the levels are perfect for oil. So that just strengthens my resolve on the trade that I want to do. When we hit that and we make that when we make that higher low on that 18-day moving average at 90, I'm going to go long with call spreads on the December oil contract, and then I'm going to take profit at around 99 or 100 or so, and then when it gets to the 105, 107 zone, I'm going to be buying puts for the downside. Okay, so two ways. We're going to play it both ways. And again, that's all supported by the options positioning in the December contract, which has the overwhelming money. I mean, look at this. Look at this. It's all white boxes. It's all white boxes. It says November, but again, the November is because the December contract expires in November, and that's just how TOS does it. I don't know why they do it like this. They should just label it December, but I don't know why they label it like this, but it is what it is. Okay, this is all the December contract expiration that expires in November. Okay, all these white boxes. That's all this. So all the money right now, everything is participating in the December contract right there. So I just wanted to share that with you guys as far as the option positioning is concerned. Let me see here. Also today, MSC, one of our very own msc-code, he wanted to share with us, and also, a lot of people asked for this as well. He's going to share with us what is going on in the Ethereum market. We have this big test that's coming up. So MSC, are you ready right now? I know you said around 12:30. We're about a minute before.
Yeah, I can start.
Oh, you can start? Okay, very good. All right. So yeah, go ahead. Take it away. What chart do you want pulled up on my screen?
Here, I'll send you a link. We can just pull this up and work from there.
Okay. And for those of you who don't know, MSC, he's one of our
Just in voice
in-house
chat.
crypto experts. He's really involved in this market and really knows his stuff here. So I wanted him to present on what's going on because there's some big events happening, and I think there's a lot of hedging that's going on and options positioning because of this. So it's a good idea to have a little backdrop story of what's going on. So there you go. Take it away.
All right. So I think the first place to start is to explain to everyone what proof of work is, which is what ETH currently is. Essentially, miners compete by using GPUs to process large and complicated mathematical equations. The person who wins that will be able to verify the transactions and then receive a reward in ETH. So that is how all new ETH is produced right now. The miners then take that and usually sell it to cover costs like electricity and new mining machines. That's causing about $20 million a day in sell pressure on ETH. So to combat this, they've already implemented EIP 1559. You can see that up there. Whenever ETH is above about 7 GWh of gas, there is ETH being burnt, making it semi-deflationary. After the merge, there will be no more miners, and the way transactions will be confirmed will be through staking and through the nodes. And it's a little bit complicated, so to keep it dumb, I'm just going to explain that they're moving away from that intensive mathematical equation model to more of a peer-reviewed model. After that, there will be no more selling pressure from the miners because they won't have to cover electricity and they won't have to cover new machines anymore. Due to those things, people plan that the price will go up due to the less selling pressure, and also because now if you stake ETH in order to validate transactions, you also receive a yield now. They're saying the yield could be anywhere from 5 to 10% after the merge, which is pretty nominal, and at a price of about 10,000, a ETH node would probably support a lower income family's income. So it's becoming more of what I would call an internet bond in the sense of it's a yield producing asset that's denominated in its own currency. And yeah, so I want to know if anyone has any specific questions. I know that this is side of a complicated topic and not everyone is probably understanding what I'm saying. So why don't we go with that? How about you, Mickey? Do you have any questions on what I just said?
When does this happen?
Great. I'm glad you asked. This is baked into the actual code. It is set to go at a certain total terminal difficulty. Right now, with the current hash rate, which is the only thing that would change the timeline of it, it's set for about September 14th or 15th.
September 14th or 15th. And this is what is this called? Is this the merge or a test event?
So this is the actual merge. The last test event was a couple of weeks ago. Basically, what they do is when it is executed, the chain will live swap to proof of stake, and it's going to happen without any interruption to the chain. So essentially, it's like changing an airplane engine mid-flight. There is a lot of risk involved in this, but so far they've had 6 tests, and they were all successful.
Nice. Okay, so that means so the expected date is September 14th and 15th. We will keep that in mind when we look at the options positioning for ETH.
Got a question, MSC.
Yeah.
So you're saying changing engine mid-flight. Is there like a massive like black swan event type downfall if the shit doesn't go through?
Absolutely. There's 2 that come to the top of my mind. One is the fact of all these apps that are built on top of it. For any reason, this change in how the transactions are validated might break any of them, which would probably very much hurt ETH because, that's sometimes the simplicity of why Bitcoin is favored by a lot of people. Nothing's going to change. It'll always work, and ETH could break in like 3 weeks. Another thing is they are changing a plane engine mid-flight. It could crash and burn. But they've done a few tests and they've been positive, so it's likely not the case, but it is a possibility.
Right. Thank you.
I have a question, and this is a very general question, and I think a lot of people would appreciate if somebody could explain this. So Coinbase recently said that no ETH can be withdrawn or deposited. What is the reasoning behind that? I'm guessing it. We're all assuming that that's because of that's coming up, this merge that's coming up. Is there a particular reason why they restrict that at this time? What are they worried about?
ETH made a test net that ran alongside its current chain called the Beacon chain. And right now, anyone who stakes their tokens is staking it on the Beacon chain. So the merge is actually the merging of those two chains together so that it all becomes one solid state of history. Sorry, can you repeat your question? I kind of lost my track.
No, so in Coinbase, they restricted all the movement of ETH. So what are they worried about? Why would they restrict it right before this?
Because people trying to do transactions during that time, some might not be validated correctly. Like literally what happens if you process a transaction on the proof of work chain, by the time it actually gets validated, it's on the proof of stake chain. Who knows what's going to happen to it? I mean, it's supposed to be merged, but like I said, anything could go wrong during that time. So in order to avoid any hiccups on Coinbase's end and limit their liability, they have frozen transactions or chosen to.
Okay, I think that clears it up for a lot of people. I know a lot of people were asking, "Oh, I can't get my my ETH out." I know some people said that on the Discord just a couple of days ago. So there you go. There's your answer right there. There's one question here on the voice chat text. What's the likelihood of a delay with a hard fork? Wasn't there prior delays?
This is a little different than a hard fork, but could there be a delay? The only delay right now would be if the hash rate slowed down for some reason. And if you scroll down, there is a hash rate chart on that page.
Hash rate. Right here.
Yep. And as you can see, hash rate is just about as high as the peak hash rate. So right now, it's still expected for some time between, let's say, the 14th through 16th, sometime in that window.
14th through 16th. Okay.
So
well, there you go.
Think of a lot of blockchains as a timekeeping chain, but it doesn't keep time in this standard, 24-hour clock. It runs on its own kind of schedule, and it runs in blocks. So basically, the total terminal difficulty is achieved when a certain block is initiated.
I'm just going to take a look at what's going on in the options chain for around that period. You said, there is a 16th expiration. Let's see. Let's see what's going on. It's a binary event, so I'm guessing probably going to see some action.
Probably a lot of speculation.
No. Actually, no. Decent, but it's not nothing like we've seen. I think maybe they did all the monthlies. Oh yeah, it's all in the monthlies. Oh yeah, look at that. 10,000, 9,000 contracts at 10,000 strike calls. Okay. Some animal spirits. So people, maybe they're thinking this is going to be super successful.
I'll be honest, there's like a 95% chance of success at this point.
95% chance of success. Okay. Interesting. Let's actually take a look. I want to see. I'm curious. See if there's any. 7.9. We're back to around $8 billion of notional value. So August 26th, September 30th. So it's all short dated stuff. Lots of September 30th. 10,000 calls, 1,700 calls. So all out the money. So are they really chasing this thing?
So because of the bond aspect of what's going to happen to ETH, a lot of people are speculating that based on how much yield it generates that it should be priced somewhere between like 7 and 10. And people have gotten really zealous with this because some big name people on Twitter have been pushing this.
Of course,
I
Twitter.
hate to speculate with the current market, like, the way it is. I don't believe it's going to happen in the next quarter, but a lot of people are willing to bet on it.
Yeah. September 30th. Oh, here's our 1700 calls. Buys, buying. Not a single. All these block transaction are buys for the 1700 call and the 1800 call. We see some selling. What is that? 11:30:16. 11:30:16. Somebody bought and sold at the same time. Why would they do that? That's the exact same opposite order. Well, that's a one-off. Okay, so maybe that's a one-off. 11:30:133. 11:30:133. Huh. Look at that. Exactly the same buy and sell at the same exact time. Same exact quantity. That's odd. Not sure what to make of that. Okay, well, we'll see. I want to look for that. Where's that 10,000? I want to know who did those. I'm not seeing it here. Maybe it happened.
I don't think they have strikes at that point.
Yeah. Okay, so maybe that was from before. Okay, yeah, because I know for Deribit they don't, for non-account holders they don't go that far. But okay, so I mean, if I had to guess, just from what I see here, just from all the calls and puts being sold, just looking at the broad data here,
and BZ could always confirm this for us later.
Yeah, BZ, he can confirm for us because he has an account. But it looks like call spreads strangles. Okay, so we didn't see this last time. We didn't see this yesterday. But it seems like people are going long gamma and long volatility then. If that's the case, if people are buying strangles, risk reversal right there. That we saw that risk reversal yesterday. Remember when we saw somebody sell calls to buy put spreads? That's a risk reversal. And we're seeing those put ratios, put spreads. So okay, so in that case, it just looks like it's more being bought than sold. Is that fair to say? Yeah, it is. Okay, so more options are being bought than sold overall. So it looks like people are going long gamma. People want that action. That's what it looks like to me.
And I would say to anyone that's thinking, oh, I need to buy before the merge, this is my opinion and this is my best guess. I think we see possibly a dip after the merge, even if it's successful. It'll go up at first, but I think you'll have another opportunity to get in just because of the current market.
I totally
also, anyone that's thinking about staking won't be able to withdraw their stake for like 6 more months after the merge or more.
I agree with that sentiment that it's going to drop afterwards. I think in the end, Ethereum, it's a risk asset. So, we're expecting, a big drop in the markets with liquidity data showing what it's showing. Our decline line and junk bonds, our high-low line also coming down. I definitely think if we have risk off, I don't think Ethereum is immune to that. I think you're right. I think after this, then people will say, now what? In the end, the macro data still points toward down. So I agree with that sentiment.
But also, since it is a risk asset, a successful merge will cause a pump in the price. I just don't think it'll stick.
Yeah. Okay. Fair enough. Another question from one of our other members. How will this affect the NFT market?
It won't really. I mean, the price of ETH goes up or down. I guess that would affect the price of your NFTs. But as far as an NFT transaction is the same as any other transaction, it gets validated and goes on the chain. It could bring more attention to ETH, which will bring more attention to ETH NFTs, maybe more volume. That's my best prediction.
There you go. Generally, you know what I noticed. I mean, I'm not an NFT expert or anything, but you know, I've participated in a few NFT, like, you know, with a few degen plays, and usually from what I notice is that when ETH price goes up, it's or when ETH price comes down, on an overall uptrend, that's usually when NFT prices go up. I could be wrong.
I never noticed that. I'm not too big into NFTs. I have a couple of worthless ones now.
Yeah,
and
most of them are worthless now. Yeah,
I'd rather buy call options.
Yeah, I agree. I like that better. Okay, very good. Any other questions for MSC for you know, his take on what's going on with Ethereum? Thank you for that, by the way. You know, there's not a lot of people that can explain this in you know, thoroughly like the way you did, and a lot of us usually get our crypto news from Twitter, which is probably not the wisest thing. So thank you for clarifying that for us, MSC.
Anytime, and if anyone has any questions, you could always message me. I'm happy to answer them.
Okay, very good. Okay, so actually, one of our members said ChartWise rejected at 2,000. We talked about this yesterday. There was a risk reversal. Somebody sold the 2,000 calls to pay for I believe it was the 1,400 to 1,000 put debit spread. So we actually did a charting session around those options levels, and we found some of our moving averages to be going around those levels right there, around 2,000, and the 2,000 is where we see some of our moving averages converge. Actually, let me take a look and see here. Yeah, it was this 125. Okay, and then we were doing the ETH. This was from yesterday. This one, weekly chart. Yep. See the 125 week SMA and the 26 week EMA are going to converge right at around 2,000 right here, which coincides with the huge short strike that we have from that risk reversal trade. And what I was saying was this: we base it off the liquidity data first. If liquidity is decreasing, but we see ETH go up to 2,000, I think it gets smacked down. Okay, so remember from our moving average theory, if price is below a moving average and approaches it on decreasing liquidity, that is a hard ceiling. Usually gets smacked right down. If we're below a moving average and we go up, but liquidity is improving, then that ceiling is less likely to hold. Same thing on the other way. If we're above a moving average and we're coming down and liquidity is not too bad, then most likely we're going to respect that floor, and respect that moving average as a floor. If we're above a moving average and we come down and liquidity is being sapped out of the market, well, then it's a very high probability that that floor will break, that MA will be no good. Okay, so that's part of our moving average theory, and part of our trade plan that we came up with yesterday and the day before. So it goes very along with that, the options positioning and everything. And today we went over all of that. We went over ETH. We went over SPX, S&P 500. We went over the VIX. We went over QQQ. We went over oil. All of these things. I just showed you guys between yesterday, the day before, and today how to structure your trades. Look at the liquidity data. Look at the macro. Start with that. Liquidity and macro first. Then look at the options positioning. Then see where your moving averages converge to any of these levels for confirmation. I think if you're looking for structure and how to build a trade from the ground up, that is a great structure to start with. Now, you can always, mix and match and add your own things to it later on. But if you're just looking for the basic rubric on how to structure a trade, I think review this week's High Noon highlights. Look at Tuesday's episode, look at yesterday's episode, look at today's episode. And I think, together with that gives you a good framework to build any type of trade in any market. Okay. So again, from the first day I started this, we're not an alert service. I don't want to give you fish. I want to teach you guys how to fish so that we can be a team of expert traders and really bounce good ideas and sound strategies off of one another. Okay, that's the whole point of all of this. So there you go, guys. Hopefully that kind of teaches you guys how to fish and how to build your own trades. Okay. Before we move on to tradition, which is to go over our indicators, our positions, and our future trades, are there any questions? Anything else anybody want to see before we get to that? Okay, then let's do our tradition. As is tradition here in High Noon Highlights, at the very end, I like to go over our current positions, our indicators, and our trade plan. So let's look at our indicators first. First things first, as we always do, I like to start with our bond data, our macro data, our liquidity data. TIP-TLT today is actually making an interesting move. It's in the process of making an outside day down. Okay, this is in the candlestick world, we call this an outside day down. The only reason why I bring it up is because every time we had an outside day down in TIP-TLT is brought with it further movements down. Okay, is this time, is it different, or is he going to do a little bit of the same? Maybe he does go down a little bit and then pops back up later. I don't know. But that is a signal that I'm looking at right here. This is an outside day down. Will it hold for the end of the day? Who knows? I've been noticing that there's been some big movements in TIP-TLT at the end of the day. We shall see. We shall see if it recovers or not. But just looking at these, look at these outside day downs. We noticed that TIP-TLT consolidates for at least a couple of weeks before it comes back up, if it even comes back up. Okay, so just thought I would share that. Okay, it's an outside day down. Generally, that's a very bearish signal. All right, that's TIP-TLT, our inflation indicator, inflation protected treasuries divided by long-term bond treasury ETF. Okay. What else? DBC, which is broad-based commodities, is pulling back. Okay, it is pulling back. So maybe that's where some of the weakness in TIP-TLT is coming from. Maybe it's just quantitatively, maybe it's just some quant funds just reacting to DBC the way it is. Well, again, I think time will tell. If it quickly reverses in the next 2 or 3 days, then I think then that signal becomes null. All right. So that is TIP-TLT. Another important indicator. Oh, oops. Something that we usually look at every day. I just X'd out of it on accident. Oh my goodness. I have to rebuild it. You guys get to watch me rebuild this. NYHLDJ. This is the cumulative. That's good that I'm doing this so that you guys can do it on your own as well. Cumulative chart. I like to see the Zoom thumbnail. It's EMA. Oops. Where is it? Oh, there it is. I'm looking for the whole word. Okay. 29 and 4. We don't need any of these. Update. Okay. There you go. Okay. Built it from scratch for you guys. Okay. So this is what I look at. This is the New York high-low cumulative line. It adds all the highs and lows for the day. Again, our MOAB signal was if this can curl up above the 20-day moving average, which it has not done so. It made its first bullish signal a few sessions ago when the 4-day EMA went over the 9-day EMA, but now it's again back down into the bearish formation. If this cumulative high-low line gets below the August lows, that means the bear market continues. Now, however, if we have a sell-off and this line makes a higher low and starts curling up again, that would be a start of a bullish signal. That would actually start the Moab signal. It wouldn't be the total Moab signal, but it would definitely set it up. Okay, so we're gonna be monitoring this for the next couple of days. I'm gonna have my eyes on this like a hawk. All right, I think it's gonna send a signal either very soon, or we're gonna see a continuation of the bear market, one or the other. Something. It's gonna tell us something really soon. Okay, that's the point. All right, same thing with our junk bonds AD line. We're actually starting to see not only midterm divergence, which I pointed out earlier. Remember how I pointed out that that in the 3-month, this was an upward sloping line, whereas in our junk bonds AD line, it's a downward sloping line. Okay, this is a little bit slightly downward sloping line. On the S&P 500, it's an upward sloping line. Okay, so now we have a midterm divergence, but we also have a short-term divergence. Yesterday, our junk bonds AD line went down, but S&P 500 is curling up. So we have a midterm divergence. We also now have a short-term divergence. Okay, something to keep in mind as you plan for your trades. Okay. That's the main indicators. Again, as always, we're always going to be looking at the dollar. The dollar is actually coming down a bit, but I believe last time I checked, it was, it's regaining some of its losses. Look at that. Look at that. It was coming down. It's regaining its losses. Euro, it started with a gain and came down. Okay. We'll see. All right. Australian dollar. This is going to be an indicator for metals and for China. I'm going to keep looking at this for our entry and UUUU. So that's part of the plan. Uranium. I'm still very bullish on uranium. I want to get in on UUUU, which is Energy Fuels. They are the owner of the only uranium mill here in the United States. I believe it's in Utah. So in the 6s and high 5s, I want to be buying shares of this. Okay, that's part of the plan. All right. So that's the first. Of course, Bitcoin and Ethereum. I keep saying the same things over and over again. As you guys noticed, my plan doesn't really change from day to day. But Ethereum and gold, I'm looking for that, or Ethereum and Bitcoin, I'm looking for that, that on that ratio chart. If I can find it, let's see, where is it? Right here. Okay, so we're looking for that Bitcoin to gold ratio to touch this red line, or the Ethereum gold ratio to touch this line. Maybe after that test net, or maybe after that merge, maybe we get a little volatility, and maybe this drops down to this line. Hey, I can only hope. If that happens, oh my gosh, I will still buy that dip. Okay, so we're waiting on that. All right, to buy the dip on that. All right. So that's that. HUT. I still have shares in that. I still am short the $5 strikes on the January calls. If we get to 165 or so, I'm going to load up on some more shares of that. F, which is our Ford play, 1380. I really want 1380 before I jump into this, okay? We shall see if we get there or not. I really hope so. PPC, it's our meat play. You know what? I had our alert set for low, or just like right here, because I thought, oh, the Bollinger Band may go up just a little bit, but it ended up going up a little bit higher than what I expected. So it didn't alert me when it touched the Bollinger Band here, because I was at a higher level than my alert. But apparently it touched the 2-day Bollinger Band not once, but twice to the tick. Like literally to the tick. 2940 was a low for the day. 2940 was where the 2 standard deviation Bollinger Band was. Idiot me, I set my alert too low. I should have been monitoring this a little bit more closely, and I didn't get my entry. So that is such a bummer. Okay, we've been planning on this since like July. All right. It's such a bummer. This is one of the ones I really wanted to get into. But if it gets down there again, I'm going to monitor this a little bit more closely. If we see a sell-off and it gets there, I will buy PPC, part of our meat thesis. Okay? So that's that. Again, the indices, I'm going to wait for that MOAB signal. I told you guys what that MOAB signal is the junk bonds AD line, also our New York high-low line, making that, higher low, on both and making that divergence, as prices and the equity markets are coming down. If we see increased liquidity by those two measures, that would be a huge mother of all the buy the dip signals. And when that happens, I'm going to be buying some shares in SPY, but regardless of what happens, I'm going to be buying some at 362, 360, 362 zone. If we get to 340, 345 zone, I'm going to be buying more shares. And then I'm going to wait for that MOAB signal. I think no matter what, it will probably happen around 340s if we get there. But I'll be buying some in the money calls in SPY. I'm also considering buying some low delta leaps that are 1.5 to 2 years out on the Russell 2000 as well, just because I think this is going to have on the next rally, this will have some momentum. I think this is going to be one of our strongest indices after this sell-off is over. I think this is going to be our strongest index. Okay, so I might buy some out the money lotto leaps on this as well when that happens. Okay. Oil, still have that oil plan, but now we're just modifying the plan to look at more prices based on the December contract. Again, we went over this earlier in the high noon highlights, all right? Based on options positioning, based on where the money is in open interest, it looks like all the money is in December. It's in the December contract. So we're looking for that 18-day moving average. Right now, it's just under 90. If it makes that higher low, which I presume it will around 90, just because we have a lot of short puts at that level. We have a huge put OI at that level. We could see those puts get sold off, causing oil to go up right as it touches and grazes that 18-day moving average. And that is where I will go long with some call spreads on the December contract of crude oil or on USO, whichever gives me the best skew. And then we're going to take profits when it gets to around 99 or 100 on the December contract for crude. All right, so make sure you guys switch to the December contract. It's not just CL, it's going to be CLZ 2022 or CLZ 22 based on your broker. But we're going to be selling it at when the December contract gets to about 99 or 100. We're going to take profits on our call spreads there, and then I'm going to buy some put spreads right as it gets to here, that 10. Let's call it, let's say 105 to 107 zone, 105 to 110 zone. I'm going to start buying some put spreads for the way down, also on the December contract as well. So it's still a similar plan, but now we're just basing the levels off of the December contract because that's where all the money is, okay? All right. And other commodities in gold, I'm going to be buying gold when it gets to the low 1680s. Again, it's just a play. We just saw institutional demand 4 times in the last 2 years at that exact level. I think it happens again. If it goes down here, I'll play just a bounce. I'll take profits when we get to the around high 1700s or so. Okay, so that's my plan for gold. Again, if you're going to be in any one metal, I think it's going to be uranium for the next 5 years. I think this is where all the money is going to be for the next 5 years. There's going to be a huge growth in uranium. My thesis still stands. I think with high energy prices, governments are going to be friendly about nuclear power. Unfortunately, it went and moved against us. We were trying to buy lower. It kept going up. We never got our entry. Hopefully, if there's a pullback in the market, we can get in around the high 5s, maybe low 6s on UUUU. All right. So that's my plan for that. Tesla. I'm still looking to short if we get up here. Let's say we get a bounce after tomorrow's Fed speech, just in case if the market was overhedged, we could definitely get there. The levels have changed because Tesla just did a stock split, but the line is still there. I still short at that line. I will buy put spreads on Tesla when we get there. Okay. So that's my plan on Tesla. So that is all my plans, all the indicators, and my current positions. Oh, I didn't go over the current positions yet. My current position is still the same. It hasn't changed yet. UVXY. We're still in the same spreads, the 14.24, 15.20. Nothing has changed, guys. Nothing has changed. What else am I in right now? I'm still in those ARC lottos. Zero or hero, whatever. Those are probably going to go to zero. Again, I did a small order and I only got a partial fill. It's negligible how much I have. It's nothing. October, Dow Jones Industrial Average ETF still in the 300, 290 put debit spreads. Nothing has changed. Literally nothing has changed. I'm just repeating myself right now. EWT still in the Decembers. Nothing has changed. I have not closed any positions. 49.40. Put debit spreads for December. What else? Europe still in the Novembers. 32.27 long the 32, short the 27. 32.27 put vertical debit spreads. IWM, I'm still in October and November, 180, 170 put spreads, long the 180, short 170 put verticals. And then, of course, QQQ, which is my biggest winner so far right now, with about 15% profit, or I think 15 to 20% last time I checked, 305, 295 put vertical spread. Still in those as well, too, okay? Nothing has changed. Right now, I'm still mostly in cash. I've told you guys, I'm about 92, 93% cash. About 7 to 8% is invested in those spreads. Half of that 7 or 8% is in the QQQ. So we'll see what happens. I'm more interested in doing the MOAB, mother of all, by the dips. And again, I already went over what our indicators are for that. Okay, so those are your indicators, current positions, and future trade plan. Boom, checkmate trading. Any questions, comments, rude remarks? This is your time. No? Going once. Going twice. Okay, sold. In that case, thank you for joining us today. We'll be back at it with high noon highlights next week, Tuesday, Wednesday, Thursday, noon Eastern time as always. If you're joining us from Twitch and YouTube, join our Discord. We have discussions like this on a daily basis around the clock. We have a lot of talented traders here with different styles and with different trade plans as well. So if you join our Discord, not only do you get my opinions, but you get the opinions of a whole community. So join us. And hopefully I'll have some time to be on again tomorrow. I might do like an unscheduled call tomorrow, like we do sometimes on Fridays. I'll let you guys know ahead of time on the Discord. I'll make an announcement if I can. Any other questions? Anything else you guys want to go over? All right, then. If that's it, have a wonderful day, guys. I'll see you guys soon.